Hey, Dave here. How low can we go? Bitcoin is back on the trajectory downwards. I'm not too sure where we're off to. I'm guessing we're gonna try and find some support in the next day or so. Whether it will take out these new lows, like if we have a look at the daily, not that flash on the daily close. You can quite clearly see that it closed below the last. Oh, sorry, you can't see. It closed below the last line of sort of daily closes there, so it's not looking great. Whether it's going to go down, do a quick liquidity grab, and work its way up, not too sure. Pretty bearish at the moment. Like there's no real dressing this up. It's gonna do some definite painful moves coming forward. Whether this just comes down, tests that sort of 30 level again or the 28 level, and then up she goes, or are we going to go down and test 25, 19, 12? Who knows? But yeah, you've got to kind of see the optimistic approach to a certain degree, but don't hold bags if you can't afford to. This is a brutal market, and especially if you're trading short term. If you're trading with leverage short term, you're gonna get wrecked. You're gonna get wrecked, especially if you have no experience. And I would not be game enough to do that in this market. I've done my fair share of leverage trading in the past, and no point making something that is so volatile even more volatile in my mind, to be honest. Like, do you want to sleep at night? That's because that is the true story. You don't want to be waking up at midnight, 1 o'clock in the morning, checking your charts, going, making sure that you're not stopped out on your positions. But I would just sort of potentially try and take opportunity. Like I'm going to look at buying not Bitcoin but some other altcoins a bit lower down, and I'm just going to sort of have a few points of entry, and if it blows through them, it blows through them, and I just have to lower my cost basis as it goes on. Long term outlook, it's really hard to say, to be honest. Like, let's have a look here. Look at the market caps here. These are some really big market caps. Like, even go down to 20, 30 range, top 20, top 30, top 40, you're still in the $1 billion range. You're not dropping below $1 billion until you get down to, I think, past 80. Yeah, that's pretty phenomenal. Like, that's a lot of money in there. Um, but the other thing you've got to consider, these are global markets. So I think it's very hard to price assets that are traded globally by a range of sophistication. So you could say it's overpriced. I feel like it was overpriced. Definitely a month ago, I was very bearish in the sense that everyone was extremely bullish, and how bullish can you go when it's just gone up 3x in a year? So I think it needs a bit of a shakedown, and this is what we needed, or what we deserved at least. This is the thing, is often that you need some punishment sometimes, and while it seems nasty, it really separates the strong hands versus the weak hands, and it separates the opportunistics as well. If you're willing to take advantage of this, if you didn't chuck all your money in and you made sure that you had an ample cash buffer, I usually always try and keep about a 25% cash position, but that will obviously vary. When you have a big drop like this, you'd be crazy not to buy up a large portion of it. Or maybe I'm crazy. That is possibility as well. So I'm looking at adding more Polkadot. Like, let's do some price it in Bitcoin. Yeah, looking at adding some more Polkadot and Cardano to the list as that gets a bit cheaper, especially if you look at it relative to Bitcoin as well. And yeah, I'm willing to lose some USDC for that, and possibly Polygon as well. I think Polygon short term has got huge upsides, especially if we have another run towards the end of the year. We could see a huge amount of people jump in if the fees jack up in ETH again. You might see Polygon and Binance Coin sort of skyrocket again, but I don't really participate in Binance's area. There's probably a huge amount of money to be had there, but I just goes against a bit of my ethics. The whole reason I do this is to get away from that centralization approach. It's basically the only thing I use exchanges for is onboarding and offboarding. Everything else, we've got ample liquidity to be able to trade on DEXs, so why not take advantage of them? And some of them can be way better priced than what you're going to get on a centralized exchange. The downfall is where you do limited, especially on some assets, you're limited to the pool size, but getting a bit sidetracked there. Let's have a look through let's have a look at the Treasury. On 10 days, it's dropped down again. We're down at 1.55, 1.55, which I think this is just them doing either a bit of Fed speak, or they're actually trying to buy it and push it down, which is probably a bigger chance. What does that sort of mean? Like, in terms, let's just have a quick go down the path of Fed speak and Treasurer speak. I think what's really important to understand, majority of what central banks do is try and guide the market with their forward guidance, which really is just try and shape it without actually having to do anything. It's basically manipulating it so they don't have to take action, so they can continue the policies they want to do. And that affects as well the prices of things, because people are going to listen to what they say, and a lot of people still take them seriously, which you'd think, well, geez, their track record's not that great, but each to their own, I suppose. And maybe it's that snowball effect. You have a small amount of people paying attention to it and acting on it, and then others take advantage of that, and you can see some potential arbitrage opportunities just in what they say. The same goes the other way as well. Like, if the markets turn around and they completely ignore what the Fed's, and you've seen that as well. You've seen back in March last year, Fed was pulling out all the stops to put in a bottom in the market, and until they really, all these spending programs basically got thrown at the market and said, this is what we're going to do, it really didn't put a bottom in. Like, the amount of I suppose optimism of what the Fed was trying to portray wasn't received very well. So that could always happen again. And I think at the moment they're just trying to cool down the market without having to actually apply higher interest rate policy. Because if they raise interest rates, geez, it's a snowball effect. I can't see it happening. And even though I don't see a hyperinflation scenario coming out of it, because there's too many different dynamics at play. You might have some areas of the economy show signs of hyperinflation, but I can't see that unless it gets into the service sector and you start seeing huge wage rises. Then we start to freak out. If there's been a lot of wage rises, then I think we should start to get a bit more panic mode. But until then, I think they're just going to try and shape it and keep interest rates low so that they can keep keep the government's financing debts basically cheap. Because if it goes up a few basis points, it's going to make all this extra spending that they want to do extremely costly, and they're going to have to raise the rates to fund that, and you're going to have a snowball effect then, because they've already talking about the global tax rate, which is a bit of a joke really, because I think most Western nations is well above 15% tax rate. So I think Japan might be the only one that's below, but for the most part, we like in Australia, we have I think 30% corporate tax, and New Zealand I think it's 28%. So it's already very high here. So you're paying through the nose as it is. So it's not really going to affect us. But what it will do is potentially put pressure, but also maybe you'll watch a bit of a capital flight as well, because countries that do jump on board with this to raise their revenue are going to end up losing. A lot of these companies are going to move to more favourable tax places, and you're going to have this endless cycle where you try and regulate those people, try and keep them from leaving, and money always flows where it's treated best, and we know this. You can just see it throughout history. Like, you can have this great idea that we're going to raise taxes and we're going to tax the rich. Rich never gets taxed. The rich is going to do. The more money you have, the more you try and hold on to it, the harder it is to hold on to, so the more effort you put and you're willing to do to keep that money. And they're going to jump geographic locations without a hitch to just minimize any form of tax. And if it becomes uneconomical to operate in a country, they're not going to hold on. If Google suddenly is getting taxed through the nose in Australia, and it's too much of a profit margins get squeezed too hard, they're not going to stay here. Like, yeah, they've been here forever, but if you're a global company and you're only servicing a tiny fraction of the world's population, who then deem they're going to tax you more, they'll jump. That's not saying that they shouldn't pay more tax, or at least everyone should be paying their fair share of tax. And in fact, in that sort of same argument, really, the tax rate should be fixed. It shouldn't scale up. It should be more like a corporate tax rate where everyone pays a flat 15% tax. And whether you're earning $1 million a year or earning $15,000 a year, that would be technically the fair thing to do. And what that would probably do as well is drive more investment into a country that took that policy. Or even better would be, just reducing it down, or even taking away the income tax and replacing it with goods tax. So you're actually incentivizing people to consume less, which is not great for the current economy. But the current economy is also not great for the world's sort of green narrative. And that's the thing, you see this green narrative pushed at the moment. Everything has to be, Bitcoin is too energy consuming, and everyone's consuming all this electricity. But you have to understand, the reason that they're doing this is because credit is cheap. They're borrowing more than they can really afford in the present day. So they're bringing forward future consumption to the present. So you're getting a huge amount of consumption cramped down into a really small time frame. Of course, you're going to get a huge amount of problems with the environment and chemicals going into the air. And it's not just carbon. I think carbon's villainized far beyond other chemicals that get released into the air that, maybe the carbon's a good measure of them, because most of them are probably bound to carbon originally, but it's still it's pretty full on. Anyway, getting sidetracked again. Let's have a look at where gas prices are on Ethereum, because that's always quite interesting. They are still very low. So if you need to do any liquidity pool maneuvers or anything like that, you can do a fast less than 30-second transaction for 18 Gwei. Like, that's unreal compared to a month ago. So what does that tell you about the network? Well, that means that there's probably a lot less smaller players, and you're still seeing a substantial amount of dollar value moving through it, but a lot less, looks like there's a lot less transactions moving around, which makes gas a lot cheaper. And maybe that's where it's going to end up going in the future, where it doesn't have to, you're pushing a lot of the transactions to layer 2 or some of these other scaling solutions, and we end up not having absorbent gas prices. But if you look at the forecasts of what people are projecting for the Ethereum token value, if you are valuing it in at, say, a massive moonboyish figure like 50k per ETH, well, that scales up. What are we at the moment? We are probably 2,500. So that's like 20x from here. 20x from here is a decent amount. So if you scale up that in terms of fees, you go, okay, you're going up 20x in terms of, because essentially if you're paying for your fees in ETH, it's going to cost you more. And that's the biggest problem between now and 12 months ago. Everyone's seeing the dollar figure, but really we were seeing more in the lines of between 20 and 50 Gwei 12 months ago. But yeah, you could potentially be looking at seeing $140 for a swap, which in dollar value seems a lot, but if you've held that ETH for a considerable amount of time, and you've ridden that price accumulation for people like banks and the like, it's not going to be a big deal. Anyway, I'm getting long here. We're getting close to the 20-minute mark. Let's wrap this up. So if you need to do any Ethereum transactions, I would highly advise doing that now, because I can't imagine it being this low for much longer. And as soon as it picks up again, you're seeing a lot of strength in Ethereum compared to other assets. So I think it'd be worthwhile playing around a little bit if you haven't already, and see how things go. Hopefully we see some better Ethereum price, some better Bitcoin price action, because really that's what's going to lead us back up again, is when that finds a bottom and we get a nice big reversal and we continue up. Still bullish for the end of the year, but if it doesn't start recovering a meaningful amount in the next few weeks, I think we might have to just admit that we are in for a bit of a quiet time, and maybe take advantage of looking at ways to generate some cash flow and delve into DeFi a little bit more, and that could be fun. And that's where you can put your Bitcoin to use. So let's reconvene at a later date and see how we go. Hopefully we have a turnaround. Catch you later.